Does it have to make sense? That's the topic of this week's Stockscores Market Minutes for August 13th, 2012. I often hear traders argue that the current trend does not make any sense. You'll even hear people say the price that this stock is trading at does not make any sense. You have to keep in mind, however, that things only make sense if you have all of the information that the market is trading on. And often, the market trades on information that you really have no idea about. It doesn't just have to do with the fundamentals of the business. It can have a lot to do with the supply and demand of stock and the supply and demand of capital. We usually don't know everything. We only learn about what was driving price action after the fact. It's therefore important to trust the market. It reflects the opinion of millions of investors, and you, as one person, are not more knowledgeable than the large crowd. All right, let's get into the analysis of the charts. Here's the chart of the S&P 500. Remains in that upward sloping channel with not a lot of volatility because we are at the top of that channel approaching resistance. That makes it very likely that we'll see a move downward. I thought that we would actually see that price drop this week, but it hasn't happened. There's a real absence of sellers in the market right now, but the buyers can't find the motivation to take stocks through resistance. If there's any bad news that comes to the market, I expect that we're going to see a sell-off here, and so I recommend some caution in the short term. The TSX 60 looks quite a bit better simply because it doesn't have that resistance to deal with. It broke its downward trend line last week and therefore should start to migrate higher. Now it's important to understand that the break of the downward trend line here relates to the fact that the market expects some sort of quantitative easing, which should help commodities, which will of course help the Canadian stock market in that it is based on commodity stocks. But if we don't get something from the ECB or the Fed, expect that this break of the downward trend line will not be sustained. For now, it looks good, but the market is waiting for some proof that there is going to be stimulative action by the world's central banks. The VXX has become something of an unimportant chart lately, but I want to stress that when you look at the chart of the VXX, you're actually not looking at the VIX index. You're looking at the short-term futures for the VIX. And as those futures expire worthless, the value of this ETF drops. And therefore it will deviate from the true value of the VIX over time. Now this is a great vehicle when the market is scared in the short term and looking for some potential disaster. You can see that it will run up very quickly. Well, right now it's moving to new lows because there's no fear in the market, at least in the short term. If you look longer term on the VIX, in the medium and long term futures, we are starting to see some fear creep into the market, some investors buying protection ahead of the fall. And that is a little bit of a concern. But in the short term, the VXX isn't doing much. And therefore, there isn't much short-term fear in the market. The Treasury Bond Fund, TLT, broke its upward trend line, and that is a sign that people are starting to put money back into work in the market. It is not, however, a real strong turnaround because we haven't broken support on this chart at 124. So this is a small bit of encouragement if you are bullish on stocks. But until we really see a flood of money coming out of this market and into the stock market, we shouldn't be too hopeful here. US dollar is, to be frank, a confusing chart. We've got falling tops in the short term and rising bottoms in the longer term being 2 months and the short term being 1 month. I think that this is a neutral chart, one that is headed sideways and really not giving much indication of where the market is likely to go. The gold chart is encountering resistance, and it, of course, is a hedge to the devaluation of currency that we would expect if there is quantitative easing. So here again, you're seeing a chart where the market says, prove it. Let's see that there's going to be some stimulation by the US Fed. And until we get that, the gold chart is going to deviate sideways. And if we don't get it, we'll probably break down through support at the green line. Now, just because the US Fed starts to print more money does not mean that this gold chart will rally. There are many who believe that gold is no longer that hedge because the US dollar, while it prints more, is really the cleanest shirt in a laundered in a pile of dirty laundry. And so we may not see the US dollar go down as you would expect it would with more quantitative easing. Oil chart has essentially bounced back to the downward trend line. It is getting stuck there now. And I think that we're probably going to end our short-term run. We may just go sideways here for a little while and then break that downward trend line if the economy is able to get better, if there is a devaluation in the US dollar. But right now, I feel like this upward trend that's been underway for the last 6 or 8 weeks may be losing steam. And so we should be cautious with the oil market. So my outlook is neutral on everything, but it's really an important time because the market is looking for something to motivate the buyers. You know, it's moved up in speculation that there will be something, but we just don't have it yet. The markets aren't really facing selling pressure, but the buyers are holding back. Traders are looking for something from the central banks, and if they fail to get it, we could see selling pressure pick up again. Remember that September is historically the worst month of the year in the stock market, and therefore we should play some defense as the summer comes to a close. Well, that has been the Stockscores Market Minutes for August 13th, 2012. Have a great week in the market and trade well.